Now speaking, Tom Shaw, Vice President, Investor Relations. Yeti Holdings hosted its Q1 2023 earnings call with Matt Raincius, President and CEO, and Mike McMullen, CFO. Forward-looking statements made on the call may be subject to various risks and uncertainties. Non-GAAP financial measures were used to more accurately represent the operational performance of Yeti's business. Now speaking, Matt Raincius, President and Chief Executive Officer. Reported Q1 sales for Yeti increased by 3%. Our team did a great job driving focus on our brand and innovation. We delivered top and bottom line results that put us on pace for our full-year financial commitments. Sales were negatively impacted by both the voluntary recall of 3 products and slower orders in the North American wholesale channels. We saw positive year-over-year gross margins reflecting lower container costs flowing through the income statement. We are on track to reintroduce improved versions of the recalled products back to market in Q4, and will be expanding our range of offerings later this year. Our strategic efforts to diversify our supply chain across categories led to production outside of China for core volume SKUs for Rambler 20. Circularity programs such as Yeti Rescues and the Rambler Buyback program have been launched. We partnered with the World Surf League, the Freeride World Tour, Oracle Red Bull Racing Team, Bassmaster Classic, Phoenix Amateur, USA Climbing Team, Metallica M72 World Tour, among others. We continue to drive impactful product marketing for our Go Box collection and Rambler bottle line, straw lid tumblers, Yonder water bottles, and Rambler beverage and ice bucket. Yeti reported 3% growth in Q1 of 2023, driven by strong performance in coolers and equipment, supported by the success of the non-impacted soft coolers and the expanded Go Box cargo line. Drinkware sales met our expectations with 3% growth led by sustained strength in Rambler bottles and the introduction of newer products. Yeti's DTC channel was up 7% while wholesale declined just 1%. Gross margins were positive year-over-year for the first time since Q2 2021, reflecting lower container costs. Yeti is on track to reintroduce improved versions of the recalled products in Q4 and has partnered with the World Surf League, Freeride World Tour, Oracle Red Bull Racing Team, Bassmaster Classic, Phoenix Amateur, USA Climbing Team, and Metallica M72 World Tour. Circularity programs such as Yeti Rescues and Rambler Buyback have also been launched. Yeti has seen positive acquisition and retention growth of their e-commerce customers. Amazon sales remain strong. Corporate sales posted solid growth throughout 2022. They opened their first retail store outside Omaha, Nebraska, which is off to a great start. Wholesale sell-through was positive despite tepid selling. International mix reached 16%, up from 13% last year. Canadian efforts are underway to build out broader customization capabilities. Australian growth remains outstanding due to new partnerships, and Europe shows tremendous opportunities for the brand. Now speaking, Mike McMullen, Chief Financial Officer. We continue to expect our full-year cash flow from operations to be slightly positive. In Q1 2021, Yeti reported a 3% sales increase to $303 million and a 4% gross profit increase to $161 million. Operating income decreased 43% to $22 million and net income decreased 46% to $16 million or 18 cents per diluted share. For FY 2023, the company expects sales to increase by 3 to 5%, with flat sales over the first 3 quarters and low double-digit declines in coolers and equipment and low double-digit decline in wholesale sales. They also anticipate operating margin range of 15 to 15.5%, adjusted earnings per diluted share of between $2.12 and $2.23, and a capital expenditure target of approximately $60 million. We have off to a good start in the year, despite managing voluntary recalls. Our product lineup and gross margin improvements are strong, which supports our global expansion. We remain cautiously optimistic with a free cash flow assumption of $100-$150 million for the year. William Blair & Company analyst Sharon Zakvia inquired, have the recent competitive activities and slower growth rate affected the drinkware business? How is the brand faring in comparison to its competitors who are expanding distribution rapidly? Is the drinkware segment popular amongst a younger female demographic? Matt Raincius replied, Yeti has seen the expansion of the market in drinkware and the growth with their broad-based portfolio, customization, and personalization. Since 2014, they have designed product portfolios to address multiple use cases, consumer groups, and form factors, while also looking at global growth opportunities with buckets, hydration, tumblers, and straw lid formats. Raymond James analyst Joe Altabello inquired, did sell-through increase in the quarter? If so, by how much, both overall and excluding recalled products? Mike McMullen replied, Joe, we are pleased with the growth across both categories and feel it has put us in a good channel inventory position. We have good sell-through reporting in the U.S., but less so outside the U.S., making it difficult to quantify the impact our business had. Raymond James analyst Joe Altabello inquired, have we finished destocking inventory, putting us in a good position? Mike McMullen replied, we experienced caution from our wholesale channel partners after the holidays, which is expected to continue in Q2. We feel good about our current channel inventory levels, although there may be too much of some products and not enough of others. We are continuing to work with our wholesale channel partners as we move through the year. Raymond James analyst Joe Altabello inquired, I was asked a question by Peter Benedict from Baird regarding the financial performance of my company. Robert W. Baird & Company analyst Peter Benedict inquired, have you identified areas of potential investment or initiatives that could be increased if the gross margin exceeds expectations this year? Mike McMullen replied, in Q1, gross margins met expectations and we are on track to hit our guided 55% for the year. We plan to use any upside to invest in raising global brand awareness, expanding capabilities outside the U.S., and investing in technology. Robert W. Baird & Company analyst Peter Benedict inquired, have production of the recall items and 2 new items already started? What is the timeline for reintroducing these products to the market and what marketing support do you expect to provide? Matt Rainchis replied, I am excited to be back in production, having completed some finished goods and building our inventory back up. We intend to reintroduce the product in Q4 of this year with marketing levers that create awareness. In 2024 we plan to bring additional sizes and colorways to the product as well. Robert W. Baird & Company analyst Peter Benedict inquired, I was asked a question by Robbie Ohms from Bank of America on. Bank of America Merrill Lynch analyst Robbie Ohms inquired, have you heard anything from wholesale partners about their outlook on customers? Are they showing caution in the wholesale channel? Matt Rainchis replied, good morning, Robbie. We discussed the breadth and diversity of Yeti's wholesalers during our last conversation. We have small independents to large nationals in the U.S. and beyond. There is no common theme for caution or not, some are leaning hard into the year while others are taking a more cautious approach for Q2 and Q3. Our conversations with regional and national accounts are very regular, weekly or daily, and we have great relationships. Overall demand for the Yeti brand is strong. We will also be reintroducing new and improved soft coolers as a springboard for Yeti awareness and demand. Bank of America Merrill Lynch analyst Robbie Ohms inquired, have there been any changes in the momentum of Yeti.com following the shift to customization and the increase in corporate sales for Amazon, or has digital marketing spending been adjusted to drive customers to Yeti.com? Mike McMullen replied, Robbie had a successful quarter, with Amazon and corporate sales being up, plus the opening of their 14th store in Omaha. On Yeti.com, demand was strong despite a unique issue in Q1 which was caused by investments made in customization that reduced lead times, allowing all orders to be fulfilled in the quarter. This resulted in a tough compare for Q1, but demand was still positive for C&E and drinkware. Matt Rainchis replied, we saw positive acquisition and retention of customers across all our DTC channels in the quarter, leading to an increase in value. Our work to acquire and retain customers is proving successful. Bank of America Merrill Lynch analyst Robbie Ohms inquired, do product cost pressures from China necessitate a price increase, and will relocating production outside of the country help to reduce costs? Mike McMullen replied, I expect product costs to be relatively neutral or slightly positive for the year. Q1 saw a continuation of dynamics that I discussed in the second half of last year, so no major changes. Bank of America Merrill Lynch analyst Robbie Ohms inquired, did Peter Grom from UBS ask a question? UBS analyst Peter Grom inquired, can we expect to return to 57 to 50% gross margin and higher by the end of 2021, and will further gross margin expansion next year flow to the bottom line or be reinvested? Mike McMullen replied, Peter is correct in his assumption that our margins will increase sequentially throughout the year, with an expected exit rate in the range of 57%. In Q4, we anticipate a higher gross margin due to DTC mix. We are not expecting to recapture all the inbound freight benefits this year, but there will be more to capture next year. We plan to invest in product and other parts of the business, like headcount, demand creation, brand awareness, technology, etc., for FY24, but no specific guidance has been provided yet. UBS analyst Peter Grom inquired, is international performance strong enough to offset any margin mix implications as it becomes an increasingly important part of the business? Mike McMullen replied, I found that after normalizing by channel, the gross margins across 3 regions were similar to those seen in the US. UBS analyst Peter Grom inquired, I have received a question from Shen Xiu at BNP Paribas. What is the progress of our project? Exam BNP Paribas analyst Shen Xiu inquired, have US wholesale trends declined double digits in comparison to international, and is the decline expected to accelerate in the second and third quarters of this year? Mike McMullen replied, wholesale was down 1% in total, with international up at a similar rate. Sell-through in the US was positive, but the US was still down more than the rest of the world due to the soft cooler stop sale, which is primarily a US dynamic. This will continue into Q2 and Q3, resulting in double-digit drops in the US. Exam BNP Paribas analyst Shen Xiu inquired, I captured 300 basis points of rate in the first quarter, was that better than expected? Mike McMullen replied, we anticipated some demand shaping due to the recall, but weren't sure how much. We now believe the impact to be around 900 basis points in Q2 and Q3. Exam BNP Paribas analyst Shen Xiu inquired, I received helpful advice from an unidentified source, and the next question was asked by John Kernan of TD Cowen. Cowen and Company analyst John Kernan inquired, can Mike provide insight into the return to double-digit top-line growth in Q4, and explain the key drivers of this acceleration? Mike McMullen replied, I've planned the reintroduction of products that were on stop sale for both direct-to-consumer, DTC, and wholesale dealers. I'm also excited about planned product introductions in the drinkware category which will help us grow throughout the year, even when normalizing for the recall. Cowen and Company analyst John Kernan inquired, have you seen a 600 basis point headwind to gross margin over the past 2 years due to freight costs? What recapture do you expect by 2024 and how is this expected to impact the timeline this year? Mike McMullen replied, we have given up 600 basis points of gross margin due to freight over 2022. Freight rates have come back down to pre-pandemic levels, so we expect to capture the majority of that back in our gross margin. We are looking at this as an opportunity to reinvest in the business with potential tailwinds to come as we exit this year. Cowen and Company analyst John Kernan inquired, did Peter Keith from Piper Sandler ask a question? Piper Sandler analyst Peter Keith inquired, do you think the shelf space on the wholesale channel will stay steady, increase or decrease in the next 12 months given the recalled product relaunch? Matt Rainchis replied, I have had conversations directly and our teams have regularly about launching in Europe, which we have been talking about for the past couple of years. We have now hit the accelerator as COVID concerns are fading. Our positioning in Europe is more DTC than wholesale, and we are seeing some green shoots with UK and Germany. Matt Rainchis replied, Peter reported that Yeti is seeing lots of green shoots across Europe. While the DTC business had an advantage during COVID, now they are seeing the benefits from it as well as from wholesale replenishment. Their brand awareness activations, endemic partnerships and Metallica tour in Amsterdam are helping them build broad-based introduction of their product portfolio. Piper Sandler analyst Peter Keith inquired, I asked a question to the panel and received a positive response, with data such as dates and meaningful words. Did the Stifel Financial Corporation analyst Jim Duffy inquired, have you seen an increase in performance marketing in 2023? What strategies have you implemented to allocate your marketing dollars to top of the funnel and performance marketing spend? Matt Rainchis replied, Jim, we don't typically speak about the performance of individual marketing channels. We have an integrated approach to our marketing funnel from top to bottom and use advanced analytics for demographic and geographic insights. Our CMO and CCO work weekly or daily to decide where to invest in performance marketing and brand awareness. Data-driven results have presented some unexpected opportunities that we're excited about. Stifel Financial Corporation analyst Jim Duffy inquired, have there been any notable changes in customer engagement on the U.S. market recently? Has the introduction of the Yonder water bottle and its more approachable price point brought a new customer demographic to your company? Matt Rainchis replied, expanding the portfolio has enabled us to re-engage existing customers and acquire new customers. Yonder and soft coolers have particularly been successful in this endeavor, but even our hard coolers and wheeled 48 and 60 models have brought in different geographies and demographics. By introducing new products, we are able to drive loyalty within our own customer base and acquire new ones. This balanced approach to acquisition and retention has. Stifel Financial Corporation analyst Jim Duffy inquired, I attended a webinar in which the last question was asked by Brian McNamara from Canaccord Genuity. Canaccord Genuity analyst Brian McNamara inquired, have Yeti's co-marketing partnerships been newly implemented? What were the motivations behind this decision, and will there be further collaborations in the near future? Matt Rainches replied, I have a lot of brand friends in the active outdoor consumer lifestyle space, and our product is positioned alongside multiple brands in multiple categories. We have plenty of retail or wholesale partner overlap. Currently, there isn't any direct co-marketing nationally. Inside stores, products like Yeti are merchandised together at certain times of the year, such as beginning of summer. Canaccord Genuity analyst Brian McNamara inquired, have all questions been answered and is the question and answer session concluded? Matt Rainches replied, I would like to thank everyone for attending our Q1 call and look forward to speaking with you again in Q2.